So what actually goes into managing, billions of dollars for millions of people, especially in an economy growing as fast as India's?
It's a huge undertaking, isn't it?
Exactly. So today, we're going to try and get behind the scenes a bit. We're taking a deep dive into HDFC Asset Management Company Limited, HDFC AMC, and their latest numbers for the quarter ending June 30th, 2025.
Right. These just got the green light from their board on July 17th, fresh off the press.
Pretty much. And our goal here really is to cut through all the jargon, all the dense financial speak.
Mm-hmm.
We want to give you a clear picture of how HDFC AMC is doing, their health, where they stand in the market, and also maybe touch on the bigger trends in India's whole asset management scene.
Yeah, looking for those interesting nuggets, those aha moments that tell the real story.
Exactly. And just as a quick snapshot before we jump in the headlines, look pretty strong. Good growth in revenue, profit, assets under management. It seems like they're firing on all cylinders.
Definitely paints a positive picture right from the start.
Yeah. Okay, so let's unpack this then. When you look at those headline numbers for HDFC AMC in Q1 FY26, what's the first thing that really jumps out at you? What's the story there?
Well, the immediate thing is just how robust the growth is across the board. Take total income. It jumped 27% compared to the same quarter last year.
27%. That's pretty substantial.
It really is.
Yeah.
Especially for a company this size, it suggests they're, really tapping into that growing investment demand in India.
Okay.
And then profit after tax, the PAT, that's also up strongly, 24% year on year. So they're converting that top line growth into actual profit pretty effectively.
Right.
Even profit before tax, PBT, saw a big jump 31% year on year. Now, they did highlight, and this is kind of interesting, their PBT excluding some non-cash charges for employee stock expenses.
Oh.
That was also up 31%. And looking at that specific number is useful because it gives you a clearer view of their core operational profitability, kind of stripping out those accounting things like stock options that don't really affect cash right now.
Got it. So it's not just accounting. The underlying business profit is strong.
Precisely. And crucially, the operating profit from their main business, the actual asset management part, that grew a solid 30% year on year.
30%. Wow.
Yeah. And they did this while keeping their operating margins stable at 46 basis points relative to their average assets under management.
Okay, 46 basis points.
Yeah.
That's about, 0.46% of the assets they manage?
Exactly. Which points to pretty remarkable efficiency, actually.
So it definitely sounds like this growth is coming from their core operations, not, some one-off financial wizardry.
That's right.
But you also mentioned something about other income seeing a significant jump. What's that about? Does that tell us anything?
You're spot on. The core growth is key. Their actual revenue from operations was up 25% year on year. Strong performance.
Okay.
But yeah, that other income piece, it surged 88% just compared to the previous quarter.
88%. Quarter on quarter.
Yeah. So it's not just a minor detail. It kind of suggests broad strength in their overall financial activities during the quarter, boosting the main business and adding another layer of financial health.
Interesting. Okay, so moving on then. A fund manager, they live and die by the assets they manage, right? The AUM.
Absolutely. It's the engine.
So how did HDFC AMC's AUM perform this quarter? And maybe how do they stack up against the competition in India?
Well, their AUM performance was definitely impressive. Their quarterly average AUM, the QA AUM, it hit over 8.2 trillion rupees for Q1 FY26.
8.2 trillion.
Yeah, it's a huge number, and that's up 23% from last year. Their closing AUM, the number right at the end of the quarter, was also strong, over 8.5 trillion, up 21% year on year. So consistent growth there.
And market share. Are they holding their ground?
Yep, they maintained a solid 11.5% market share in that QAUM across the whole industry.
Okay.
But here's where it gets really interesting, I think. HDFC AMC is particularly strong, maybe even dominant, in actively managed equity funds.
The active side.
Exactly. Their actively managed equity QAAUM grew 22% year on year, and their market share in that specific segment is a strong 12.8%.
So higher than their overall share.
Right. This actually makes them one of the largest active equity managers in India. That's a really powerful position to be in.
Why is that so significant?
Well, if you look at their overall AUM mix compared to the industry, HDFC AMC's average AUM is about 64% equity-oriented. The industry average is more like 56%.
Okay, so they're much more weighted towards equity.
Much more. And this isn't just, a small difference. It's quite strategic. Equity funds usually command higher management fees than, say, debt or liquid funds.
Right, higher margins.
Exactly.
Yeah.
So this mix directly helps their profitability, those operating margins we talked about. And it positions them perfectly to benefit from India's, growing interest in equity investing.
That strong equity focus, yeah, that clearly stands out. How does this fit into the bigger picture, though? The whole Indian asset management industry. Are others seeing similar trends? Or is HDFC AMC kind of doing its own thing here?
No, they're definitely not an outlier in the trend itself. They're more like a leader within a market that's, booming.
Good.
The whole industry's QA AUM grew massively from about 59 trillion rupees in June 24 to over 72 trillion in June 25. That's 22% growth year on year for the industry.
So a rising tide lifting all boats, basically.
Pretty much. Everyone's
Yeah.
benefiting. And equity is still the dominant force across the industry, holding steady around that 56-58% mark of total AUM.
Right.
And if you look at where the new money is going, the net sales for equity funds over the year ending June 25, it was huge, about 3,700 billion rupees.
Wow. Compared to
About 1,300 billion the previous year. So a massive jump. It
Yeah.
really tells you that both individuals and institutions are pouring money into equity.
And what about other types of funds?
Well, interestingly, liquid funds actually saw net outflows, money coming out.
Why would that be?
It often happens when investors feel more confident, They shift money out of very short-term safe holdings like liquid funds and put it into potentially higher growth assets like equity for the longer term.
Makes sense. So the numbers paint this really compelling picture of growth, but, behind the figures, who are HDFC, AMC actually serving, and how are they reaching people across such a huge, diverse country? What does that investor base look like?
This is a really key part of their success story, I think. They've really established themselves as a go-to choice for individual investors.
Okay.
Individuals make up 70% of their total monthly average AUM. That's way higher than the industry average, which is around 61%.
70% from individuals. That suggests a pretty loyal base, right? Less flighty than institutional money, maybe.
Generally, yes. It suggests a very stable, sticky client base. And the scale is just incredible. They serve 13.7 million unique investors.
The 13.7 million people.
Yeah. And manage 24.3 million live accounts. So many people have multiple accounts or investments.
And how does that compare to the whole market?
Well, think about this. India has about 55 million unique mutual fund investors in total. HDFC AMC serves 13.7 million of them. That's like 25% penetration.
Well, 1 in 4.
1 in every 4 unique mutual fund investors in the country. It's quite impressive.
And are people investing lump sums, or is it more that systematic approach?
Oh, the SIPs, they are just exploding in popularity. It's continuing big time.
Right.
Just in June 2025 alone, HDFC AMC processed over 12 million systematic transactions.
12 million in 1 month.
Yep. Worth over 40 billion rupees. Just imagine the scale of that 12 million disciplined investments hitting accounts every month.
That's staggering.
It really is. And the whole industry saw huge SIP flows, too, about 273 billion rupees in June. The total amount invested through SIPs has reached 15.3 trillion rupees. It just shows how much individual Indians are embracing this idea of regular long-term investing.
It really sounds like they've got their finger on the pulse of that individual investor market, which, like you said, is amazing in a place like India. How are they doing it? How are they reaching people geographically? And how much is technology playing a role here?
Their strategy seems to be, pretty comprehensive. They've got this huge network, 280 offices across the country.
Okay.
And importantly, 196 of those offices are in what they call B30 locations.
B30, meaning beyond the top 30 cities.
Exactly. Smaller cities, towns. It shows they're really committed to tapping into that huge potential outside the major metros, often underserved markets.
Makes sense.
And this network lets them serve customers across, they estimate, about 98% of India's PIN codes. They're actually the number 2 player in these B30 markets overall.
And how much business comes from there?
Those B30 locations contributed nearly 20%, about 19.4%, to their total monthly average AUM, so it's significant.
Okay. And distribution. How do people actually buy their funds?
It's a mix. A big chunk, 42.3%, comes directly from investors.
Directly. Online, presumably.
Mostly, yes. Then you have mutual fund distributors, or MFDs, bringing in about 26%. National distributors, the big platforms, about 22%. And then banks, including HDFC Bank itself, make up the rest.
Right. But you mentioned direct. How big is the digital shift overall?
It's massive and accelerating. Customer onboarding, so new customers signing up via digital platforms, it surged from 86% this time last year to 93% in this latest quarter.
93% online onboarding.
Yeah. And get this, 96% of all their transactions, buying, selling, switching, are now supported by their online platform.
Wow.
So it's not just a side channel anymore. It's fundamentally how they operate and engage with most customers. It's really changing the whole experience, making it easier, faster, probably bringing in younger digital native investors too.
Definitely seems like a game changer. Okay, let's maybe dig a bit deeper into the financials again.
Yeah.
Beyond the top line, what about costs, expenses? Any shifts there that tell us about their operational management?
Sure. On the expense side, total expenses were up, but maybe not excessively, about 9% year on year. Employee costs, which are usually a big chunk for businesses like this, they were up about 8%.
Right.
Now, it's worth noting that this includes a non-cash charge, about 57 million rupees, related to those ESOPs and PSUs we mentioned earlier.
The stock option stuff.
Exactly. It's an accounting cost for options already granted, doesn't hit their cash flow right now. It's a pretty standard way companies incentivize staff for the long haul.
And did they issue new ones?
Yes, they approved a significant number of new ESOPs and PSUs during the quarter. Again, pretty standard practice to keep employee interests aligned with shareholders.
Okay. And what about the overall balance sheet? Does it look healthy? Growing?
Yeah, it shows continued strength. Total assets grew quite a bit, now over 87.5 billion rupees. And their equity base, the shareholders' funds, also expanded significantly.
Right. And they must have their own investments too, right? What do they do with their own capital?
They do. Their investment portfolio is pretty large, almost 74 billion rupees.
And where's that invested? Mostly equity.
Actually, no, it's quite conservative. The vast majority, about 82%, is in liquid and debt instruments. Very safe stuff. Only about 10.5% is in equity and a bit in arbitrage.
Interesting. So managing equity for others, but keeping their own capital safer.
Seems that way. And a huge chunk of those investments, nearly 90%, are actually held in mutual funds, probably their own or other low-risk funds. It reflects a very liquid strategy for their own money.
Makes sense. Any other key financial metrics? Like profitability ratios, dividends?
Yeah, a couple important ones. Their return on equity for the last full financial year, FY25, was a very healthy 32.4%.
32% ROE. That's pretty good.
It's excellent, yeah. Shows they're generating strong profits relative to the money shareholders have invested. And they also paid out a big final dividend for FY25 during this quarter, 90 rupees per share.
So returning value to shareholders too.
Definitely.
Okay, beyond just the pure numbers. What else is shaping HDFC AMC's sort of longer-term strategy? Are they looking at things like ESG, corporate responsibility? That's huge these days.
Absolutely. And their commitment to ESG, environmental, social governance, it seems quite integrated, not just an afterthought. They have a dedicated ESG and CSR committee right at the board level.
So top-level focus.
Exactly. And you see it in tangible initiatives. They mentioned one called Nurture Nature 5.0, where they provide school bags made from recycled plastic for every digital SIP registration.
Oh, that's clever. Ties business to sustainability.
Right. Then there's ITP Sahili, which is a financial education program specifically for women, empowering women financially.
That's important.
And even something called HDFC MF Planet Aspirations, aimed at investor education for kids. So really thinking long term.
And governance, diversity.
Yeah, they highlighted good governance metrics. Over half their board directors are independent. And they mentioned decent representation of women in their workforce, about 28%, and also significantly in executive management, around 23%. And strategically, they just continue to offer that really wide range of products, active funds, passive funds, portfolio management for wealthier clients, alternative investments, basically trying to cater to almost every type of investor need.
Covering all bases.
Pretty much. Oh, and they do have that international subsidiary down in Gift City.
Ah, the finance hub.
Yeah, HDFC AMC International. But they noted its contribution is still pretty small, immaterial to the overall group results right now, but maybe something for the future.
Right, planting a seed there, perhaps.
Yeah.
Okay, so if we were to sort of wrap up our deep dive here on HDFC AMC, the big picture seems to be a really strong quarter. would you say?
Oh, definitely. Very strong.
Driven by that solid AUM growth, especially in the active equity space, which is so key for margins.
Yep, that stands out.
And this really powerful focus on individual investors right across India, tapping into those smaller cities. And massively helped by that huge digital push.
Absolutely. I mean, the numbers, but also the strategic moves, they paint a picture of a company that's not just benefiting from India's growth, but actively driving parts of it and really capitalizing effectively on multiple fronts.
Yeah, it really feels that way. So thinking bigger picture then,
Yeah.
as we look at this incredible momentum in India's whole asset management world, and you've got players like HDFC, AMC really leading the charge in key areas, what does this signal for the future, do you think? Are we really seeing a kind of financial democratization happening in India, driven by these more accessible investment options?
It certainly feels like it could be heading that way, doesn't it?
And if so, how might that really reshape how individuals build wealth, maybe even for generations to come in India?
That's the million-dollar question, isn't it? Or maybe the trillion rupee question now. It's fascinating to think about the long-term impact.